Good morning and welcome, everyone. I'm Tom Bowley, Chief Market Strategist at EarningsBeats.com, and this is Trading Places Live. It is Thursday, October 31st, 2019. Happy Halloween to everybody. I'm going to bring my video producer in here. Gretchen, happy Halloween. How are you doing today?
Happy Halloween, Tom. I'm good. How are you?
I am doing great. This is one of my favorite holidays. My kids are a lot older now, so it's still nice seeing all the other kids in the neighborhood coming by. But for me, I remember it was the favorite holiday for my dog for years. My dog loved kids, so every time the doorbell would ring, the dog, his whole back end would be going back and forth, wagging, and he just loved going and greeting the kids at the door. And I know you've got a couple dogs. I was wondering how they do. They get excited, or do you dress them up?
They do love kids, but this is the first year we're going to be in a house where we'll have some traffic on Halloween, so it's going to be an experiment. But they dressed up this weekend and went to a doggy Halloween party at the park, and they were a hot dog and a lamb. So we'll see how it goes this year.
All right, that sounds pretty cool. I never did dress my dog up. I probably should have, but he probably would have gotten into it. He would have been out with the kids, probably trick-or-treating. But anyway, those were the days. I tell you, here in South Carolina today, it's supposed to be really nasty weather, so I think they're probably going to have to postpone it because we got storms and everything coming in all day and tonight. So anyway, I'm sure everybody doesn't care about the weather in South Carolina, though. So let's go ahead and get things going. We got a pretty good show today. We've got, you can see, I'll go through the daily market recap, what happened yesterday, a little bit of what's going on this morning. Earnings spotlight. Man, between yesterday and today, we got a ton of companies, a couple big ones you may have heard of them. Apple, you got Starbucks, Facebook, a few you may have heard of. So we'll go through some of those earnings reports, upgrades, downgrades, break it down. This is a pretty popular segment we used to do on Market Watchers Live, where I take an area of the market and just break it down to the core level of individual stocks that look good within that group. So I think you'll enjoy that. It's a little bit of a kind of adding on to what I was doing yesterday. I had the same type of a segment yesterday, and I kind of ran out of time, so I want to go through and kind of finish up on that. And then I'll end the show like I always do with three you must see. These are three charts that really caught my attention. I think should catch yours as well, and so you want to stick around for that at the end of the show. Let's go ahead and jump into the daily market recap. And yesterday was a pretty good day. We ended up moving up, setting new all-time highs on the S&P 500. Let's take a look at the action here. Dow Jones Industrial Average finished up 115 points. Here's that S&P 500 new high, 3,046.77. And if you pull this chart up here, you'll see that actually our high hit 3,050. So first time ever hitting that 3,050 level. NASDAQ, after being down quite a bit earlier in the day, rallied back, finished up 27. Small cap stocks didn't quite get back to the positive territory, but you can see after being down a lot earlier in the day, we did print a little bit of a hammer. Of course, it's not off of a downtrend, so that's not really that big a deal. But we do need to get a definitive close up above about that 980, 985 level. That would be very bullish on the SML. 10-year Treasury yield today is down about 6 basis points. I'm going to watch this pretty closely because I'm kind of in the camp that I think we've got an uptrend started on the 10-year Treasury yield. And I would say probably the 167 to 170 area is a level that I really don't want to see us move much below, because if we do start to head back down, this is going to start to look more like a symmetrical triangle, which would be a continuation pattern of a downtrend in the yield. So I'd like to see this 20-day hold and move back higher. We'll talk about that in just a second. Utilities and real estate led yesterday, a couple defensive groups, not too unusual. Market for the most part was consolidating. We did have a little bit of rally later in the day, which was nice. Diversified industrials had a pretty big day yesterday. GE came out with its earnings, was up more than 11%. And as a result, the entire group finished pretty strong. You can see up 2.3%. Energy, not so much to the upside. Actually, energy down at more than 2% yesterday as crude oil prices fell. U.S. inventories not really coming in the way the bulls would have liked to have seen it. As a result, energy down. Transports had a rough day yesterday. Now, I think this is still within the confines of a pretty nice uptrend. I think transports are going to be one of the catalysts going to lead the market to the upside. So I'm not too concerned about this move down. We'd had a huge move to the upside I think this is profit taking down to that 20-day moving average. Maybe give it down to about 10,500. Let's see if that holds today. Futures are a little bit lower. I don't know. Maybe we'll test that 10,500 area, but I do think transports move back up, and a breakout above 11,000 on transports. It would be hard to argue anything but bullish things for the market. Anyhow, let's keep that in mind. As far as the 10-year Treasury yield, let's pull that chart up. Here is the movement to the downside. So what I was saying about a symmetrical triangle, what you typically see in a symmetrical triangle, first of all, you need a trend because these triangles are continuation patterns. Well, we clearly have a trend. We've been going lower on the 10-year Treasury yield for a long time. We got to this bottom, and the way a symmetrical triangle would form is you would see lower highs, so the rallies wouldn't quite get back to where they were before, and the lows would be higher lows. So we could start to see something like this. That's why if we come back down and we lose this support area that I was talking about, I'm going to say 170 down to about 166, 167, right in here. I think if you lose that along with the 50-day moving average, it begins to look more like a flag and a more of a bearish pattern. So that's what I don't want to see happen. I want to see the market continue to believe that the economy is going to strengthen. And if that's the case, we should see the 10-year Treasury yield continuing to move higher. So what I really want to see is this TNX push back up above this 190 level. I think that would be a very solid confirmation that the uptrend in Treasuries has ended. And as a result, Treasury prices come down, money rotates from the defensive Treasuries into the more aggressive equity market. Okay, let's pull up another chart. Let's go into, I still want to stick with the 10-year Treasury yield, but I want to look at that yield spread. And you can see the 10-year Treasury yield versus the 2-year has been coming down for the last several years. And we got a lot of headline news when it went negative right here over the summer. But it started to turn back up again. And with what the Fed is doing, by announcing they're going to buy $60 billion worth of short-term Treasury bills each month for the next 6 months. Part of that plan is to keep interest rates lower on the short end of the curve and hopefully forge new highs and start to move higher here in this spread. If you see that, one of the things, and I bring this up, because when we see this yield spread moving higher, one of the fallouts or one of the things you can expect is that financials will outperform the S&P 500. This isn't a chart of the financials. This is a chart of the financials relative to the S&P 500. So when you get these moves up in this spread, that's when you tend to also see this really nice relative action in financials. So something really important to watch. We're starting to bounce here. You can already see that we've started to come up on the financials on a relative basis. If this continues moving higher, I think financials are going to be an area you want to be invested in. Down here on the bottom, by the way, this is a correlation. So this is just giving you a sense of how closely these two relate to one another. So in other words, when this spread is moving in one direction, generally speaking, this is positive correlation. So generally speaking, you're going to see financials also moving in that same direction. Down here on the bottom, you can see banks during these periods of rising spread, how they tend to perform extremely well on a relative basis. This is also happening again, and also very strong positive divergence. So just want to point out areas of the market, or one major area of the market you're going to want to pay attention to, because we've been seeing this yield spread falling for the most part throughout much of this bull market. If that changes, we could get new leadership, and that's not a bad thing. Anytime we get financials and industrials leading the market, it's okay. We don't always have to have technology and consumer discretionary being the best groups out there. All right, let's take a look. There were a couple of economic reports out, and that is initial jobless claims, 218,000 versus 215,000. September personal income came in as expected, rising 0.3%. Personal spending also the same as expected, rising 0.2%. Quarter three employment cost index rose 0.7%. That was expected. And coming up later this morning, October Chicago PMI, the expectation is for it to rise from last month's 47.1 to 48.3 this month. Yesterday, ADP employment report came out as expected, 125,000 jobs. And also yesterday, Q3 GDP initial reading 1.9%, better than the anticipated 1.7%. So even though growth has been coming down, it was still better than expected. Slow to moderate growth with an accommodative Fed can be very good news for equities. The Fed announced another 25 basis point reduction yesterday. I was actually hoping for 50. I know I was in the minority. I think they had room to cut to 50 because of the lack of inflation, the fact that inflation's below the Fed's target levels. For me, it would have been more to weaken the dollar and then to inflate commodities. I think they had room to do it with the economy not exactly flying. They had an opportunity, didn't do it, and we'll just move forward. But the Fed did say they're going to continue to be information dependent. They did not promise any future rate hikes. Initially, the market went down a little bit, then came back. But overall, I think the Fed remains somewhat accommodative, and that is good for the bulls. Okay, let's move into earnings. Got a bunch of earnings coming up, of course, over the next few weeks. But last night was a pretty big night. Probably heard of this company. Apple reported last night. They came in with really good numbers, and I had talked about Apple. I've been talking about Apple for the last few months. There's a number of things that I think have been working in Apple's favor. Number one, when we saw the weakness from the trade war back in the fourth quarter of 2018, and then we saw it again, a lot of back and forth, well, mostly just down action back in May. You can see that the computer hardware group in both of those periods really took a big hit to the downside. Apple got hit to the downside, and you can see Apple relative to the S&P 500 and computer hardware relative to the S&P 500. All of those during those two periods were down. But when the market took the next hit in September or August, you can see that Apple actually, after an initial push to the downside, actually started rallying, and you can see this on the relative charts. Apple versus computer hardware, Apple versus the S&P 500. Even though a lot of the trade-related stocks were getting hit back in August, Apple was not. And that was my first clue that Apple was going to have a very, very strong quarter. And you can see the relative strength throughout this quarter has just continued and continued. Apple last night reported revenues $64.06 billion, market expecting $62.86 billion, an easy beat there. iPhone sales came in well above expectations. Bottom line, $3.03 versus $2.84. And let's see if I can get you a current pre-market. I know Apple is up pre-market. Wasn't up a lot, but you got to realize that the stock has come up a lot here just in the past few months. I mean, if we look back here at this chart, you can see the last 3 months, Apple's risen from the low 190s up to hit 250. And we're not talking about a small company here. We're talking about $1 trillion company making a almost 30% move in 3 months. That's kind of crazy when you think about it. But Apple is up $4 and change in pre-market. 247.45 is the last trade I'm showing, up 1.72%. The gap up, though, however, is not making a breakout. If I'm a short-term trader and I held into earnings, I'd probably take the gap up and leave in the short term. I love Apple. I think Apple goes higher, but if it's not going to break out with its with an earnings catalyst, makes me wonder if it's going to make this breakout. So I think we could see maybe at least a 20-day test here. So if I can get out 247 and get back in 237, I personally would do it. All right, that wasn't the only earnings report. Let's go over some of these others. Facebook, big earnings report out of Facebook. $17.65 billion in revenue, market expecting $17.35. Bottom line, $2.12 versus $1.91. Really good numbers there in terms of their pre-market action. Facebook right now up $8.35, $196.60. So on the chart here, it is going to gap up above these prior highs. So I think this one, unlike Apple, and Apple may break out. I mean, there's nothing saying it can't. But this one is now gapping above. Facebook is gapping above some overhead resistance that it struggled with for the past 3 months. I think this one's got room to run back up to the 207, 208 area. So I think Facebook, if it does pull back, I think low 190s probably is going to represent pretty good buy. I think it's going to make a move up to 207, 208. Starbucks just matched estimates on the bottom line. And if you recall, they had actually warned a while ago when you saw this big move down in some of this heavy volume. So they came in 70 cents. That's what the market was expecting. Top line, they did beat those 6.75 billion versus 6.68 billion. You can see the stock has been in this downtrend for a while. I think that maybe we're going to get a move back up above that 20-day moving average. Here it's up $2.80, 3.33% right now, 86.99. So it does look like it's going to at least open above the 20. And then the question becomes, will it close there? If you look at Starbucks on this daily chart on its way down, notice that the lower lows here came with higher lows on the PPO. Positive divergence tells me 50-day test is likely on this. So I think we could maybe make a run for $89, $90 on Starbucks. So that's why I think it has a pretty good chance here to keep moving. Let's take a look at just a couple more earnings here. KLAC, I'll tell you, KLA Corp, big semiconductor stock that's been doing very well. They did beat top and bottom line, but the stock and the group has gone up so much, it probably wasn't quite enough to keep the stock going. It is down about $1 in pre-market last time I looked, but it was a nice report. Maybe a 20-day test, and then I'd expect maybe go a little bit higher. Couple of stocks that I just want to point out. These are smaller companies, but they were probably a few you should take note of. These first two I actually sent out to Earnings Beats members. Well, that didn't work out very well. Let's try this again. I sent these out to Earnings Beats members. I sent out 10 of them actually, we had a webinar night before last, and these were all companies that were going to report last night, and I used relative strength to tell me whether or not, these were all strong stocks. So I just picked 10 stocks that I thought would have good reports and probably decent reactions to those reports. And Apple was one. Here's a second one, Ultra Clean Holdings. And if you look at the chart, we had just broken out recently. You can see the three white soldiers there. Kind of got a little bit of a pullback. Nice volume trends. Look at the move up back in September, heavy volume. The breakout back in July, heavy volume. The semiconductor group went up through 3,900. We got a really strong group. And look at the stock, Ultra Clean, relative to its semiconductor peers. You've already got one of the best areas of the market. And here's one of the best stocks within that group going into its earnings report. They came in with their earnings $254 million versus $245. They bottom line 21 cents versus 16 cents. They guided Q4 revenues and earnings per share higher, and the stock was up about 7% when I saw. I didn't see it this morning, but last night after hours, I think it was up about 7%. Another one in this space I also had sent out to members was Cirrus, and that is CRUS. Big move up back in August, and you can see a huge spike in relative strength. Since then, we've just kind of been consolidating, making a move back toward the upper end of this range. I really liked it. Again, it's in the semi group. This report, they just blew the numbers out. 389 million versus 320 million, 155 versus 94 cents on earnings per share. Crazy. But you can also use relative strength to the downside. I want to show you Terex, TEX. They missed on their earnings, 1.02 billion or in revenues, I should say, 1.02 billion in revenue versus 1.11 billion. And then the bottom line, 82 cents versus 83. And they guided fiscal year 19 revenues and earnings per share lower. Now, the stock had been going up here the last few weeks, but look at this relative weakness on this stock. It's actually in a group that just made a move to a 52-week high, but it has been in a constant downtrend relative to the group. Want to know why? Well, we found out with the earnings news. So relative strength can help you in terms of if you're holding a stock, whether or not you want to hold it into earnings, but also can tell you some of these stocks that probably are not going to come out with very good news. All right, let's quickly move into upgrades and downgrades. Just wanted to go over a couple here with you. First one is EAT. This is Brinker International. The reason I want to go over this one, this is an upgrade. Big move up here, volume starting to pick up. Same thing here, breakout to about a 9-month high. Look at the volume coming in. Check out relative strength here. I know the restaurant groups has been kind of weak over the past couple months, but this one all of a sudden has caught fire. Getting an upgrade in an uptrend. I wouldn't be chasing these gaps, but this is one I'd have on my radar on any kind of a pullback. I think 44, 45 range probably be a pretty good area there. LOW, this is Lowe's. They are also being upgraded today. This one on a relative basis to the home improvement stocks has not been very good. So if I was in, I'd probably take the upgrade and exit. One downgrade I'll show, and by the way, Lyft was also upgraded, LYFT. As far as the downgrades go, well, let's see if I can get this coming up. Come on, there we go. GDI was downgraded. The stock has been in a downtrend versus the industrial machinery group for the last 5 or 6 months, getting downgraded today. Volume had been moving higher. I want to see this stock hold its 20-day. I wanted to kind of end with this one because this is a group that I wanted to talk about a little bit. So we're going to go into break it down now. And there were two groups. Yesterday in my earnings beats talk, I focused on the commercial vehicles and trucks index primarily. And I want to just show you the seasonality for those of you who maybe didn't see the show yesterday. DJUSHR, commercial vehicles and trucks, over the last 20 years, look at the strength, first of all. It averages going up 5.7% in the month of November alone, 2.6% in December, and it really doesn't slow down much through the next 4 months of next year. This is the sweet spot for commercial vehicles and trucks. We are in it for the next 6 months. So seeing that the group just made a breakout right here to a new high, and I'll bring this up. Let's go a couple years. But you can see all of these tops here in 2019 finally made that breakout above 2050. I would say, another key breakout would be up around 2125, 2130. But this is a group that's beginning to show relative strength and one to focus on. Another group, though, that I would be paying attention to is the industrial machinery group. Look at this major top coming across here over the last 2 years at 680. If it makes this breakout, I think you got to be really prepared to follow some of the strength. Now, I'm talking about individual stocks, and I'll go over those in just a minute. But let's pull up the seasonality here because you're going to see very similar type historical trends with industrial machinery. Look at the last 5 years, up every year and averaging 5.3% in November. 79% of the last 20 years, we've seen us go higher in November. 4.4% is the average. That also is the best month of the year for this group. So these are two groups in the industrials I'd pay very close attention to. And you can see the next all the way through April, very similar. This is a group you want to be paying attention to. So where should we go? Well, I can tell you that if you wanted to find stocks and the group, one of the best ways is to go into scooter reports and just type in industrial machinery in the search box. Boom. There are your scooters, top performers. Here's Illinois Tool Works. Look at this. This just came out with big earnings and just moved higher. Now, if we pull it up on a relative chart, oh, come on, let's get this up here. All right, so if we pull this up on a relative chart, look at the sideways. I love these basing patterns and the breakouts, heavy volume. The group's trying to make a breakout. If it does, here's one of your leaders, ITW. So if I see the group breakout and I get a little bit of a pullback in this stock at some point, 164, 165, in my opinion, would be great entry. So this is one certainly to keep an eye on. A couple of others. I'm going to give you some that have already reported earnings. Let's see, PNR. I'll keep trying. We'll get it up here in just a minute, hopefully. Here we go. So PNR, you can see the volume picking up, moved to a multi-month high, took out gap, or at least the bottom side of gap resistance. This hasn't been a great performer, but you can see over the last 5 or 6 months, definitely picking up steam to the upside. So this is one maybe to keep an eye on. Let's see, another one. How about DOV? They've already reported. They have now beaten their earnings estimates in 6 consecutive quarters. Big volume, gapping up, taking out this prior high. Relative strength, just hit a new 52-week high versus the industrial machinery group. So this, in my opinion, is how you kind of break it down. You start with a group that looks good. In this case, seasonality is kind of a tailwind. And then you go into the scooter reports and you take a look at individual stocks that actually are showing some pretty nice action. Now, here's one to watch today in this industrial space. This is a small cap, SPX Corp, ticker symbol SPXC. They reported earnings, and they reported, I believe, this morning. It could be later. I'm not sure if it's this morning or if it's after the bell. You'll want to check that out. But this is one that has been a leader, and it's a small cap. So if you're a little bit more aggressive and you might want to take a chance with a smaller company that can grow more quickly and whose share price can grow very rapidly, then SPXC might be something to keep in mind. All right, let's move on to the 3 you must see. I'm going to start, we were talking about, different areas of the market that have been performing well. And I have shown you this group multiple times recently, but it continues to outperform the recreational products group. So if we can stretch it out, see if I can get this stretched out for 1 year. Yeah, and I'm just going to quickly annotate this and just show you. I mean, this top right here, we gapped up above it, came back down, tested this area, and then broke to a new high. This is acting very, very bullishly, the recreational products group. Now, the second chart that I want to show you that you must see, and this was a chart that I featured in the Earnings Beats Digest newsletter last Wednesday. So a week ago, when I saw recreational products doing well, I did my own kind of a break it down, and I said Garmin is one of the stocks that will be reporting earnings in a week. This is a company that is really starting to strengthen again. You can see after gapping up at the end of July on earnings, it pulled back, kind of held on to this support, certainly gap support back here, and then it has been on a 3-month move back to the upside. So it's been a strong stock in a strong group. I've said I thought that they were going to report very, very strong numbers, top and bottom line. They blew the numbers out of the water, and look at that reaction yesterday. Stock up more than 10%. So this is another stock that I think is certainly worth knowing about. This is definitely a chart of one of the 3 you should see. Now, that was the breakout and gap support. I believe going forward that your 2 key levels on support are going to be the low from yesterday and where we opened yesterday. So this is an area somewhere down the road, if we pull back, that's where I would be looking for buyers to step back in. Now, another chart, this is one that I featured recently on the 3 you must see. It was probably, a couple weeks ago. And this is BGFV. I'm pretty sure it was included. Let's see. Yes, it was included probably, a little over a week ago. Probably, right back in here, maybe 2 weeks ago. But this was a stock that was starting to turn higher. And you can see the relative strength started building relative to specialty retailers. Now we've got specialty retailers starting to go. Big breakout. We already had the relative strength coming in. Then we get the news. Very, very important. I just wanted to point this out as your final 3 you must see. All right, that is it. Again, I want to wish everybody happy Halloween today. Really appreciate you stopping by. Thanks so much for tuning in. Please remember to tune in to Trading Places Live here on StockCharts TV every Tuesday and Thursday from 9 to 9:30 a.m. Eastern Standard Time. Have a great day, everybody. Happy trading.
Today's market volatility provides savvy traders and active investors with an abundance of profitable opportunities. At the Traders Expo Las Vegas, November 7th through 9th, over 75 of the most respected traders in the world, including Dennis Gartman, Tom Sosnoff, Todd Gordon, and Tom DeMark, will explain how they're adapting their strategies and share the specific trading opportunities they've identified in equities, options, forex, futures, cryptocurrencies, and more. Claim your free pass to join them at tradersexpo.com.
Hi, I'm Arthur Hill.
And I'm Julius de Kampenaar.
And you're watching SCC TV.